All right, guys, it's Paul Singh, the market speculator, with the trade report for Monday, July 17th, 2017. Big week today, big report here because we're going to be talking about a lot of things. All-time highs, we've got earnings, we've had a number of trades here in current positions, and we have a shift from stocks to ETFs because of earnings. And then also we're going to talk about banks and financials. So a lot to go over today. First of all, SPY broke out to all-time highs. Clean break of this range. Fantastic price action. If there was one thing I'm still a little concerned about, that is the volume here. Not so much how much volume it is, because generally during the summer months we do get less volume, but it's the pattern where the dips have been on heavier volume than the breakouts have been. So I would like to see a little more green volume, but other than that, market's looking fantastic going into earnings season. Now, Qs also, if we pull up the Qs here, technically fantastic. Remember back in here, we were seeing rotation out of tech into different areas. And now tech has come back. And interestingly enough, the other areas are still strong. So that's a good thing. So it's not like we rotated back into tech and a bunch of other stuff is doing bad. It seems like everything is doing really good now, which is why we also see a strong IWM here. So that's really good for this fantastic market. And again, sorry guys for the cough. It's been 3 weeks now, still recovering here. But Qs technically looking very strong. So we had that first step, which was to make a pivot, which we did. Then it was to remount. And once it started to remount in here, we took that TQQ position, which we'll go over in a second. And now it's moving fantastic. Now we want to see the test of the highs. If we get to those highs, we're actually going to take profits in our TQQ. And then we want to see a break, much like SPY has done. So technically, the Qs are recovering here really nicely. Again, the volume pattern still stinks, but other than that, price action is fantastic. So indexes looking really good. Last week, we wanted to see that test of the highs, and we got that. We got a break of the highs, and then we'll see where we go from here. Now, we have earnings starting up. We had banks reporting last week, and we had some interesting moves in banks. I'm not going to pull up all the bank stocks, but let's just pull up XLF, and we can see here in the morning, the reaction was really poor to some of the bank earnings. And we can see with XLF, it was down in here. This is around where it opened, continued downwards. But then by the end of the day, look what happened. Not only did we recover, we got back up over the 9. When we were breaking the 9 very easily here, went right to the old high, relative high, and then bounced right at that level. This was a fantastic day trade, by the way, but really good move for swing here. Financials are back at the top of our list. Now we have Goldman Sachs reporting, I think it's Tuesday or Wednesday, so that'll be a big one as well. But banks, after it looked like they were going to crash, when you see something like this where they recover very strong, that's always a good sign. So, I thought about actually taking the position on Friday and decided to hold off, especially with Goldman Sachs coming up on Tuesday. But we are definitely watching XLF and then our trading vehicle, FAS, very closely. We took profit. I'm going to jump around here. We took profits in FSLR on the break here. Hit our target range, which was above 42.50. So still on our focus list, but we had 3 really nice trades last week with FSLR, X finally hitting our target here at the top of the range, and then Netflix as well. Still, Netflix still looking really strong. But speaking of, well, actually, let's finish our current positions. So now we've got TQQQ, and we're right on our way. We're up about, I think it's 5 points here. Now, if it pops early in the week, if tomorrow it jumps up to 108, 109, 110, we'll look to take profits in here. And then finally, our only other position now is LABU, consolidating nicely over this range, but not really, pushing up all that much higher. But we'll be looking for that move to test the highs, and we could take profits if it does do that. So 2 positions right now: TQQQ and LABU. Now, with earnings season coming up here, and interestingly enough, while earnings season lasts for a month and a half, our big tech stocks and a lot of the focusless stocks we're watching are all reporting within the next 2.5 weeks. So that takes our focus or our shift away from stocks, because we don't enter stocks before earnings, or we don't hold through earnings. Generally, if a stock is going to report about a week and a half to 2 weeks from the date I'm looking at, I'm not going to trade it. I'll just wait for the earnings and then do a post-earnings type play. And you guys know from last quarter, we have a lot of different earnings breakout setups that we trade. Netflix is the big one tomorrow. So Netflix has been really strong after this big move down. Now, if we get a strong earnings and break over highs here, we'll look to get back in on a post-earnings play tomorrow. And not only are we gonna watch this closely for us trading Netflix, but also it sets the tone for all these big techs. So all these big techs are reporting. Let me go through them really fast. Apple 725, Tesla 82, Facebook 726, Google 724, Baba 810, which is a ways away, Nvidia 810 a ways away, and AAOI 83, and then even some of our commodities, POT and FCX and X, they're reporting at the end of this month, and GWPH, another one I'm watching, 87, FSLR 82. So we've got all of these coming up, which makes it a little difficult to trade. Maybe at this point, we could trade some of the early August ones, but the ones that are reporting in July, we're going to stay away from right now. So even though I like a lot of the patterns, what we're going to have to do is, if we decide we like big tech, we can take a bigger position in TQQ. Or we can take SOXL, which is a semiconductor ETF, and that is on our watch list as well. So why don't I flip to that here? We've talked about earnings. The other commentary on earnings is we want to watch for trends. So we're going to look at all of these different areas: commodities, oil, semiconductors, social media, all these different types of stocks, and see how the groupings of those stocks do after they report. So that can help with our sector analysis in figuring out what areas we want to be in. So right now, everything looks good, but after earnings, things could change. So we're going to watch that very closely. Okay, back to the ETFs now. Let me really quickly go through some of the ETFs we're watching. We already talked about FAS. Financials look really strong. I won't hesitate to jump into this, especially after Goldman Sachs reports. We just talked about SOXL looking really good here. We could add a position in SOXL. UWT, oil, let's go to USO, is right at that 50-day moving average. I talked yesterday about wanting to see that break, and maybe we could take a position in oil. Even though oil has been a really choppy play, maybe it looks like maybe this downtrend is over, and we've had, all of these downtrends have led two nice bounces, and we could be seeing that here as well. So UWT is one that we're watching very closely. BRZU, Brazil, has made that nice kind of first thrust into the gap here. I'm going to see how price action reacts. There is some upheaval in these areas, so we'll have to, even when you enter, you probably want to enter with a little smaller position size. But overall, it's recovered really nicely after that huge gap down. QURE, this is one we have never traded. Healthcare has been really strong, a leading sector, and if we look at the leveraged ETF here, very strong. Love this pattern. We could have entered in here actually late last week, but if it pulls back even a little bit, I might take a position tomorrow in this, and not only play to, let's say we could enter at 41.50 or 42. We could look at the top of the range around 44.50, but maybe even play a breakout to 46 or 47. So I really like QURE, and I'm not too worried about the liquidity, even though it doesn't trade as heavy as some of our other ETFs. It is tracking, a different ETF, so it should follow suit with that ETF. EDC, emerging markets, along with Brazil, but showing relative strength to Brazil. And part of this is also because of China. So you can see here, huge breakout. We do need a pullback. And maybe another reason I have this on the list is I could look for a quick runner short if we get a reversal candle. And I forgot what the inverse ETF is, but I'll let you guys know that if I end up taking that. So EDC, yen, which is a leveraged ETF for China, on fire, much like EDC. So another one at the top of our list, but another one we could short with Yang, which is the inverse here. So if we think of shorting that, we'd essentially go long as kind of a rubber band play on Yang. And I think that's it for the ETFs I'm watching right now. Let's go to a few of the stocks. And Nike has already reported. this is a post-earnings breakout play. I like how it's holding the 9, so this is one that you could enter pretty quickly here. When I didn't look it up, but I'm assuming this is earnings with this kind of volume here. Before I make the trade, I'll look it up. But a big gap down, but recovered nicely. Now, if it gets up over and closes at 131 or 132, that would essentially be a gap down reversal, much like we did with a couple of the FANG stocks last quarter. So, and what we're looking to do with FAS right now as well. So Win is at the top of my list to see if it can hold this level. And if it does, it could completely reverse this gap down. So I'm looking at Win very closely. GWPH looks really strong. It reports on 8/7, so we've got about 3 weeks here that we could play a move to maybe the 200-day moving average, and that would give us about 10 points here. So watching GWPH, even though it does have earnings on the horizon, but enough room there. And then Tesla is 8/2 and looks very strong here, kind of another gap down reversal type play. I talked earlier about it on a break of 340, but maybe we take a shot earlier going into 8/2. Maybe it gets a little push going into earnings, and we could limit the downside risk very easily, just about maybe 9 or 10 points here on a small position size. For me, would only be about a $500 or $600 loss. And the upside, maybe it could run up to 350, 25 or 30 points here going into earnings. So we'll watch Tesla very closely. And then the other big tech we can still play is BABA, and that's broke to new highs, but we needed to pull back. So Apple, Netflix, Facebook, Google, they're all out of the picture right now. We'll have to wait for earnings on those. All right, guys. So a lot going into this week, a lot of potential trades. We'll see how the market reacts to last week's big push and earnings coming up.